This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Stocks jolted. Blue chips have their worst day in 3 months as a Malaysian airliner with 295 people aboard crashes in conflict-ridden eastern Ukraine. Was it brought down? If so, by whom? And what might the deadly incident mean for the investing climate worldwide?
Ground offensive. Israel moves into Gaza, adding to the tensions that roiled stocks and drove money into bonds. What you need to know about rising geopolitical risk and how it could affect the markets.
And deep job cuts. Microsoft will lay off up to 18,000 workers, the largest number in its history, as the new CEO tries to reshape the company. We have all that and more tonight on Nightly Business Report for this Thursday, July 17th.
Good evening, everyone, and welcome. Geopolitical risk hammered stocks today, leading to a triple-digit loss on the Dow Jones Industrial Average and the S&P 500's worst decline since April. The market-rattling events began late morning with news a Malaysian jet en route from Amsterdam to Kuala Lumpur crashed over eastern Ukraine. All 295 aboard were killed. Immediately, speculation arose that the plane flying close to the Russian border in an area largely controlled by pro-Russian separatists had been brought down by a missile. The stock sell-off picked up steam late this afternoon when the Israeli prime minister instructed his military to begin a ground offensive in Gaza. Thursday night, troops were already moving in, supported by tanks, artillery, and naval gunboats. The blue chip Dow finished at its lows of the day, falling 161 points, dropping below 17,000. NASDAQ off 62 to 4363, a nearly 1.5% slide. The S&P 500 down 23, off 1.2%. Safety seekers poured into treasuries, sending prices higher and yields lower. Gold gained more than 1%. Even the price of wheat rose because Ukraine and Russia are both big producers of that commodity. Unanswered questions abound about what happened to that Boeing 777. What brought it out of the sky as it cruised above eastern Ukraine at 33,000 feet? Phil LeBeau has been following the story all day and joins us with the very latest developments and what we know now. Phil?
And Tyler, what we know at this point is that the U.S. has said that it was a surface-to-air missile that brought down MH17 earlier today while it was flying over eastern Ukraine. Here's what was involved in this entire incident. When you look at today, the number of passengers on board, 280, I should say, and a crew of 15. It lost contact. The plane lost contact at 33,000 feet. There was no distress signal. So it was very clear that whatever happened was catastrophic at 33,000 feet. And again, the surface-to-air missile, that's no longer a question. The U.S. government says intelligence confirms for them that this was, in fact, a case of the plane being shot down out of the sky. That's according to Vice President Joe Biden. Those are his words, shot down out of the sky. And if you look at maps of the incident, it's very clear that the plane, as it was going from Amsterdam over to Kuala Lumpur, was almost through Ukrainian airspace when it was hit by that missile. We went back and we looked at the same maps from Flight Radar 24. An hour or two later, all airlines flying now around the airspace of Ukraine. Not surprising given the fact that shortly after this happened, Tyler, almost every major airline that flies anywhere near Ukraine, all of them came out and said, we are telling our pilots to steer clear of there. All flight paths will go around there. And in fact, some airlines have suspended flights into Kiev. So this is a case where they're still investigating exactly what happened in those final moments. But it is, according to the U.S. government, a case of the plane being shot down.
What do we know, Phil, about who's investigating the crash site on the ground and whether the black boxes have been discovered? Who's in control there?
Well, the black boxes have been discovered. Whether or not they're being held by Ukrainian insurgents or the Russian government, that's a big question at this point. And who will take control of this debris field, which stretches over 10 miles, that remains to be seen.
Phil LeBeau, thank you very much.
Joining us now, Larry McDonald. He's senior director at Newedge, where he deals with macro policy issues. Larry, as you heard from Phil's report, this is no longer an accident. It was an intentional act. How does this new information impact the investing climate, the business climate? How significant is all of this?
Well, Susie, as we came into the summer, brokers, financial advisors, Wall Streets have been telling our viewers watching us right now that this is going to be the summer of low volatility, stay away from bonds, and stay away from gold. And if you look at today, that's been turned upside down. Bonds, the 30-year, hit the lowest yield in almost over 24 months. And then if you look at volatility, we had one of the largest surges in many, many months. And there's just a total different upside-down world relative to what Wall Street's been telling our viewers.
So what is your advice to people who are wondering what I should do with respect to this? Is this a time to basically stay still and let things develop, or is it a time for moves?
Well, you want to consider, Tyler, air travel. You want to watch carefully, because if this affects air travel, that affects consumption. Global GDP estimates going into the year were about 5%, and now they're down at 3.75. The U.S. GDP going into the year, in terms of economic activity, were a lot higher, the expectations. So if we have less air travel, if we have people staying at home, that hurts consumption. So I think you want to look very carefully at the trends over the next 5 days to figure if this really is a terrorist attack, and what are the next steps.
Yeah, and what are sort of the next steps that we can expect here? Because, you know, this is coming a day after sanctions were declared against Russia. Now we've got this incident, and we don't know all the connections here. But if this turns out to be a prolonged superpower conflict, what does all that mean for us? You said the world has been turned upside down. What does that exactly mean?
Well, it means opportunities. If you look at Russian equities, I was on CNBC in March, and we recommended getting long Russian equities. You could see a tremendous buying opportunity there, because those stocks are going to get absolutely destroyed. So emerging markets, foreign stocks, Russian equities, everybody's terrified of them. So investors want to buy things that really, the greatest moment of fear are the best buying opportunities. And I think this will play out over the next month.
Money moved into bonds and gold today. Is that an enduring trend?
I think so. Tyler, there's so many things with both bonds and gold. The bond market has tried to sell off 3 or 4 times, and each time we've had these vicious rallies. There's a tremendous amount of there's a lack of supply, really, and because the Fed's done a lot of QE, even though QE's coming off, there's other issues behind the scenes. Gold. Wall Street hates gold. Well, every firm on the street had a target below 1,300 on gold going into the year, and now gold's been going up. So I think you do the opposite of what the crowd's doing, and I think gold and bonds over the next couple of months would be a nice place to be.
What if we get a lot more information over the next 24 hours? Could everything just turn the other way around and we go back to, quote, normal?
Well, you know, you still have uncertainty in the region. You've got Mr. Putin, and you have the midterm elections. So remember, the Republicans, watch the wires. Mr. McCain on Twitter has been going after the president a little bit. The midterm elections, we did a study over the last 60 years. Volatility around the midterm elections is twice the normal, the rate of off a year. So this is a midterm election year, and you're going to see that both the White House and the Congress throw barbs at each other. That creates volatility, and I think that's what you'll see going forward. The Republicans only need to pick up 6 seats in the Senate. If the Republicans take the Senate, it changes a whole bunch of dynamics for the economy.
All right, Larry, thank you so much for coming on the program. Larry McDonald,
thank you,
from Newedge.
Well, there was other market-moving news today, and Microsoft led the way. We told you earlier this week that job cuts were coming at the company, and today we found out how deep those cuts would be, and they are deep. Microsoft will lay off 18,000 workers over the next year. It's part of the company's plan to streamline its operations and become the dominant player in the cloud. Shares up 1% on this down day. Josh Lipton has more on Microsoft's move.
Investors knew job cuts were coming at Microsoft, but the big surprise is how many employees the software giant is really letting go. Microsoft is cutting up to 18,000 jobs. That's 14% of its workforce, and about double what Wall Street expected. Most of the cuts are coming in the Nokia division. Microsoft bought Nokia's phone business for $7 billion nearly a year ago, and it's now cutting about half of its employees.
It's a pretty bold move. And I think what it does is it signals that Microsoft is not going to get kind of on the slippery slope with Nokia. They're actually going to trim the Nokia cost structure very substantially, and that was something that was worrying investors, that this acquisition could really dilute earnings going forward. It'll still have an impact, but this will help mitigate that, I think.
In a memo to employees, CEO Satya Nadella wrote, "The first step to building the right organization for our ambitions is to realign our workforce. The company will start with 13,000 cuts right away. The cuts are expected to be completed by next June. Microsoft says the restructuring will result in a pre-tax charge of up to $1.6 billion. Microsoft stock moved higher on the news, hitting a 14-year high this morning. The stock is now up nearly 20% this year. Since taking the helm from Steve Ballmer in February, Nadella has steered the company away from its PC-centric focus and instead emphasized mobile technology and the cloud, or web-based software sold as subscriptions rather than licenses.
Yeah, in terms of the cost savings, he really needs to put a lot of strategic endeavors on mobile and cloud. I could see more M&A specifically in those areas, as well as big data. And at this point, Nadella is really the general, taking the troops to where they need to go and making sure that Microsoft can compete with the Apples, the Amazons, the Googles on the horizon. This puts them in a much better position to do that over the coming years.
Today's job cuts are just the latest example of Nadella's bold moves to make Microsoft his own. So far, investors and analysts have cheered his decisions. We'll get a lot more information about how Microsoft is performing and more details from Nadella about these job cuts when the company reports earnings next Tuesday. Josh Lipton, Nightly Business Report, Silicon Valley.
For more now on whether the massive layoffs will help reshape the future of Microsoft, we're joined by David Garrity of GVA Research. David, welcome back. Good to have you with us. Is Satya Nadella on the right track?
I think Satya's got a proper focus here in terms of the company. Bear in mind that Nadella came to the CEO role after having basically gotten Microsoft's cloud operations up and running. And to the extent that he'd had the great success there, it certainly positions him well from a vision standpoint to lead the company going forward. Taking these costs out and investing in areas of higher growth certainly should get the company up to where earnings right now are going to be down 10% year over year, but revenues are growing 16%. If we can get the earnings growth in line with the revenue growth, the stock probably moves higher from where it is now.
Mm-hmm. So talk to us a little bit about what is Microsoft going to look like, let's say, 5 years from now. A lot of talk about mobile, about the cloud, about restructuring. What's Microsoft going to be? What are we going to say about it?
I think the cloud operation probably will represent something between a third to 50% of the company's revenues in terms of the type of services that they offer. With respect to kind of the core products that we know Microsoft for now, the Office Productivity Suite and their Windows operating system, they face major competition from the likes of Google with Android and also from Apple with the iOS operating system there. So that's going to be a far more competitive business. One question is that the Xbox, where the company, certainly has been moving into our living room. Does that get spun off to shareholders? Possibility. I think Microsoft is, though, going to have to stay with their search advertising business, which they might actually take over entirely from Yahoo, who seems to be fumbling. So I think from that standpoint, the major pieces you're going to see, obviously, rise in terms of cloud, certainly mobile services offerings, and delivery via the internet over mobile devices.
What would you like to see them do with respect to the Xbox? You anticipated my question. And second, the stock is already up 20% this year, a 14-year high. You say it can go higher. How much?
Well, we're going to have to see, clearly how well the execution goes in the second half of the year. But I would say it's probably not out of the question that if we have a positive market environment overall without today's volatility, you might see a $50 share price between now and the end of the year.
David, thank you very much. We appreciate your being with us.
Thank you.
David Garrity of GVA Research covering Microsoft for us.
And staying in the tech arena, Google posting a big jump in second quarter revenue, and that's thanks to strong demand for advertising. Google revenue surged 22% to $16 billion. That topped Wall Street targets. But earnings came in below estimates. Google earned $6.08 a share. That's a 16-cent miss. But shares still climbed after hours following the report. Let's bring in Morgan Brennan to talk more about Google. So, Morgan, you've run through all the numbers. What's the key takeaway?
Well, I think the key takeaway here with Google, we can talk about Google Glass, we can talk about driverless cars, but at the end of the day, Google's biggest business is still its online advertising, and that's why we saw those revenues jump 22%. That was because of strong ad demand. And the biggest, most interesting thing about this report, this is the first time that Google has actually broken down its ad data to differentiate between its own sites like YouTube and Google.com versus its network partners like AOL. And what this report shows us is that Google's own sites have been performing relatively better with advertisers versus those networks. So the key takeaway here, Google's advertising platform has been doing better than perhaps earlier reports had suggested.
All right, Morgan, stay right there. We're going to move on now to IBM, which, now stay with me here, it reported higher than expected quarterly revenue as it continues to shift to higher-end businesses such as big data and cloud computing. But total revenue actually fell 2% to $24.4 billion in the second quarter. It's a long streak of declining revenue. Nevertheless, it was above the analyst average estimate of $24.1 billion. World's largest tech services company. The earnings there up to $4.32 a share. That was 3 cents above estimates. Shares of IBM initially rose on the news and then fell back, as you see in that graphic. It's an interesting story here, Morgan. What's the takeaway?
It certainly is, and I think you hit the nail on the head when you said the word revenue. Again, that's the story here with IBM, because even though it did post better than expected results, we did see shares fall in after hours after that report, and it all did come down to that revenue number. It's down 2% versus last year, and this is the 9th consecutive quarter that we've seen revenue declines year over year for the company. So growth has been slowing there. It's been falling there. And the real culprit here, once again, it's the hardware division. That has been falling. All but one of the past 8 quarters, we have seen hardware sales fall by double-digit percentages. This quarter was no different.
They have their work cut out for them. Morgan, thank you so much. Morgan Brennan reporting from the NASDAQ. Well, a big management change over at Hewlett-Packard. Meg Whitman, who's president and CEO, has now taken on a new title of chairman of the board of directors. She replaces Ralph Whitworth, who stepped down earlier this week for health reasons. Whitman has led the world's largest computer maker since 2011.
Still ahead, why senators are demanding the chief executive of General Motors fire one of the company's top execs.
On Capitol Hill today, General Motors' top lawyer came under attack. Senator Claire McCaskill demanded that the automaker fire its chief attorney after an investigation found the legal staff acted too slowly. It didn't alert engineers or top executives to a potential safety issues in some of its vehicles. But CEO Mary Barra came to his defense.
How do you have a system in place that doesn't account for that?
We had very senior lawyers who had this information and didn't bring it forward, who are no longer with this company.
Well, Deborah Nowak-Vanderhoff is still with the company, and she had the knowledge.
As we went through the details of the Valukas report very carefully, and I would say, when in doubt, we reached further to take action. There are many lawyers that are no longer with the company.
I think there's been a blind spot here. I really do. My time is up. I think the failure of this legal department is stunning. And the notion, I mean, you look around government, when something like this happens, you know what? Secretary Shinseki didn't know about those problems with scheduling. Nobody told him. He's gone.
Senator Richard Blumenthal also called for the firing of GM's top lawyer, saying that the ongoing Justice Department investigation will likely find evidence, these are his words, cover-up, concealment, deceit, and even fraud.
Morgan Stanley's quarterly earnings more than doubled, beating estimates, and that is where we begin tonight's market focus. Strong results from its wealth management and investment banking businesses helped offset a decline in trading revenue. That revenue from trading stocks and bonds and commodities down 13% in the quarter. Shares were down a fraction today to $32.30. United Health Group also reported strong second quarter results, sending shares higher. The health insurer saw its revenue increase helped by growth in its public and senior markets. Also cited the Affordable Care Act for its strong enrollment. On those results, the company hiked its full-year revenue forecast, and that helped send the stock up more than 1.5% to $85.11. Shares of AutoNation moving the other way, dropping after the auto dealer posted earnings and revenue that missed estimates. The company's CEO did note that it was the 15th consecutive quarter of double-digit earnings growth, but investors still weren't impressed. Shares were more than 8% lower at $55.82.
Disappointing news at Mattel as well. It posted earnings that came in way below estimates and revenue that missed too. Second quarter profits plunged more than 60%, weighed down by costs tied to its acquisition of mega brands. Sales of its iconic Barbie doll also declined, the biggest drop since 2009. The stock was off 6.5% to $36.46. Regional lender Fifth Third Bancorp reported a drop in profits as its mortgage banking revenue declined and it took litigation-related charges. It also lowered its full-year guidance because of continued pressure on its mortgage business. Shares fell almost 6% to $20.28. And then there's Key Corp, another regional bank. It posted solid second quarter profits and revenue thanks to loan growth. The company also announced it reached a deal to buy Pacific Crest Securities. It's a technology-focused investment bank and capital markets firm. Shares were down, though, 4% to $13.62.
Well, shares of some of those regional banks have been on quite a run this year, but after some questionable earnings today, what is the state of the sector? Dominic Chu takes a look now.
Banks come in all shapes and sizes. You've got the Wall Street investment banks like Goldman Sachs or Morgan Stanley. Then you've got the big money center banks that have all kinds of operations, from investment banking all the way to traditional lending. And then there's the regional banks, smaller firms that tend to lend mostly to small and medium-sized businesses as well as home buyers. Those who are more optimistic about economic growth and a stronger consumer often invest in these types of banks.
The right approach, I think, would maybe be for a diversified investor to have exposure to each, and that way they're covered on the micro level as well as the macro level.
Larger regional bank players like Pittsburgh-based PNC Financial and Atlanta-based SunTrust banks have both posted gains better than the overall sector. At the same time, Cincinnati-based Fifth Third Bank and Salt Lake City-based Zions Bank have lagged. One of the reasons for the gap is the uneven nature of the economic recovery. That's why many advocate taking a more diversified approach and investing across the entire spectrum of financials, because overall, the sector could be a good value for investors.
We think the health of the financial services sector is going to be an integral part of a continued rally in the stock market. Financial firms provide the liquidity and the grease and oil of keeping the economy going and growing. And so, financials have underperformed the broader market. They've improved a little bit this year, but that means they're a little bit more of a better value proposition for investors going forward.
Financial stocks have lagged the overall market since the depths of the financial crisis, but if the economy does manage to get better, these types of stocks may be the ones that benefit more than other stocks in the market. For Nightly Business Report, I'm Dominic Chu.
Coming up on Nightly Business Report, Phoenix real estate rose from the ashes after the downturn, but now it might be stumbling again. That's next.
Well, almost as soon as housing was firmly declared to be in recovery, it seemed to have a relapse. The latest reading on new construction, a dismal disappointment. Housing starts down 9% in June from just the month before, and building permits, a future indicator, down 4%. Now, nowhere has the road to recovery been more ridden with potholes than in Phoenix, where our real estate reporter Diana Olick takes a deeper dive.
Good job. Julia and Mike Lurch put their North Phoenix home on the market last March, listing it at $300,000.
My real estate agent says it's kind of like fishing. You throw your reel in and it's just how deep do you need to get to hit some fish?
After 107 days and several price drops, they still had no bites, so they pulled it off the market.
We thought, I don't want to sell it for a song.
Phoenix, overbuilt and overbought by flippers during the housing boom, it crashed hard. Home prices fell 56% from their peak in 2006, bottoming out in 2011. Foreclosures were rampant. Then, fueled by hungry investors, prices rose fast, now up 45% from the bottom. But investors priced themselves out of the market and left it to regular buyers who can't afford the higher prices.
They're still looking at it from the distressed property mindset a little bit, that they should be getting this great deal Whereas a lot of the folks like us that have been maintaining our properties well, we're not just willing to give them away for a song. So buyers are very picky.
Phoenix home sales are now falling again and prices are flat.
Right now, demand is very weak for a number of reasons, and that's kind of masking the fact that supply is also weak.
The reasons, like the rest of the nation, some people are still repairing their credit. Others don't have enough equity in their homes to sell and move up. Demand is also weak because prices are high, credit is tight, and younger Americans aren't buying.
I'm starting to think if demand gets back to normal, then the supply is not going to be able to get back to normal as quickly.
Builders are slowly coming back to Phoenix, but they've had to drop prices dramatically this year.
I feel like it's Groundhog's Day. We're overbuilding. I feel like they are overexpanding for what there is out there.
And perhaps building on a foundation of recovery that still has too many cracks. For Nightly Business Report, I'm Diana Olick in Washington.
And before we leave you, we want to recap tonight's top story. Stocks selling off today on geopolitical concerns. At midday, a Malaysian airliner from Amsterdam to Kuala Lumpur went down over eastern Ukraine. Senior U.S. officials have since confirmed to NBC News that the plane was shot down. Then late in the day, Israel's prime minister gave the go-ahead for a ground offensive in Gaza, and the Dow dropped 161
A very
points.
busy day. You're going to be away for a couple of weeks. We can't wait for you to get back in
I got
early
a little bit
August.
of surgery to take care of, but I'll keep you posted on what's going on.
We wish you the very, but
Thank
we
you
want
very
selfies now.
Okay.
All right.
You can count on that. That's Nightly Business Report for tonight. I'm Susie Garrett. Thanks for watching. I'll be back in a few weeks.
And I'm Tyler Matheson. Good luck, Suze. And have a great evening, everybody. We'll see you back here tomorrow night.
I'm Susie Garrett with a Nightly Business Report news brief. Stocks selling off today on geopolitical concerns. At midday, a Malaysian airliner from Amsterdam to Kuala Lumpur went down over eastern Ukraine. Senior U.S. officials have since confirmed to NBC News that the plane was shot down. Then late in the day, Israel's prime minister gave the go-ahead for a ground offensive in Gaza. As a result, the Dow fell 161 points to drop below the key 17,000 mark. The Nasdaq shed 62. The S&P lost 23 points. Microsoft says it'll cut 18,000 jobs over the next year. IBM posting higher than expected quarterly revenue as it continues to shift to higher-end businesses such as big data and cloud computing. And Google's second quarter revenue also rose 22% thanks to strong demand for advertising. Be sure to tune into Nightly Business Report right here on your public television station.